Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and it is Monday, October the 11th. This is Spotting the Trade. So before you go, make sure you guys hit that like button and subscribe. There's been some confusion down there. There's a bell right next to the subscribe button. If you drop that down, click all. That way you get notifications when I come on live. It's just the all for me. So make sure you guys are clicking on that and comment throughout. I'll circle back around, make sure everybody's clear of concept. But we're trying to feed those bots by smashing that like button. So throughout this, if you find something that makes that light bulb go off, please share that with others. All right, without further ado, let's get on with the economic data. It's a bank holiday today here in the United States and in Canada, so it's going to be a pretty quiet day. We did get some economic data across the pond, though, but nothing that's going to really be market moving. Later on, Wednesday, Thursday, Friday, that's when we're going to be getting some economic data that should be pushing this markets again throughout the week. All right, let's take a look at the overall markets. I'll share my screen here. Give me a second and let me make sure I share. There we go. Got the screen sharing. Crude oil making that move to the upside, despite the fact that we're not seeing that massive demand coming from the manufacturing sector. I would have expected to see that a little bit more, but manufacturing sector is holding on to some strength here, and we're seeing the markets make that move to the upside here in crude oil, and we're probably seeing it at the pump. I know a lot of folks are trying to drive around looking for cheaper gas. Well, it's not happening, and that's because we've broken up into that $80 a barrel mark, and that's going to start making gas prices across the United States hover above $3 a gallon. Bonds came off a little bit more than I was expecting, folks. I'm not really seeing interest rates start to go higher anytime soon. Yes, they might start talking about the taper. That taper might start happening towards the closer to the end of the year, but I think it's most likely going to happen at the beginning of next year. Now, keep in mind, when we're talking about interest rates, as these bond prices start to fall, all right, that means interest rates are going up. They're completely inversely correlated. So as the bond prices go down, interest rates go up and vice versa. So right now, seeing those interest rates rise, if you haven't gotten your mortgage refinance, probably something to really be considering right around now. And if you haven't added to your IRAs or Roth IRA, make sure you're doing that this year too. All right, so before the end of the year, because you're only going to get to the end of the year to do that. All right, gold futures, pretty much unchanged. We have broken down a little bit, but for the most part, we are holding on. There's inflation, folks, and I don't think it's as transitory as everybody's saying. We're starting to see those prices move up across the supply chain, and those prices are being passed on to the consumer. That means that they're likely to stay here for a longer period of time. When they can pass it on to the next person, they are going to usually hold on to those prices, because even if prices start to go down, they start thinking my profit is going to start going up if I can hold on to those. Bitcoin making some moves to the upside. Again, I'm on to Ether. I would rather see Ether make those moves. I think that there's some strength behind it to make incremental moves over what we're seeing there in Bitcoin. Now we got Nasdaq starting to peel off. Now, we talked about this whole head and shoulders pattern a long time ago before we ever broke through that neckline. Now that we're below that neckline here, you can see the market is struggling to get back above it. That is typical for a neckline on a head and shoulders pattern. And if you guys haven't been following along with the head and shoulders pattern here, when we started pulling this thing out, here is our neckline that we've drawn in here. One shoulder to this side, we've got the head here, and our other shoulder breaking down right there. Sorry, not a very good line. Yes, we did get another bounce here, but now we're starting to look at lower highs and lower lows on this market. So again, I'm starting to look for this target to come into fruition. We've been talking about this trend channel here and the 200-day simple moving average, which is this line right here. That's the 200-day. All of those things are really going to be that support that we're looking for, and that would complete this head and shoulders pattern that we're looking at here in the Nasdaq. And we've seen this pattern show up across the board, and some other ones, not so much here in the in the Dow Jones Industrial Average. It never really formed that good head and shoulders pattern that we'd like to see. You know, one person might say that this is the big head across the top. Now that it's now that it's already said and done that we've got a head and shoulders like this, but it is a really ugly one. I would not even necessarily, I haven't even talked about it, to be quite honest, because it just is not a very good one we would like to talk about for future setups, which is something like this, where we can see again, it's not a beautiful head and shoulders, but we can see it here once I draw it in, that there's a shoulder, there's the head, and we've created the next shoulder. Now, one thing that we haven't done is broken that neckline here. And one things when we talked about when we set up this pattern that I didn't really like this negative neckline. I usually like more of a positive neckline there. It just seems to form up a little bit better, obviously, because it's a lot more difficult to break a neckline that's trending down, and we bounced on it. It will act as support, as neckline will, but a break below that is what somebody's going to be looking for it to complete that pattern. And we've got a point of control that's drawing this down, folks. So I'm still bearish. Overall risk assessment for equities is still to the downside here, unless we get some really good economic data later on in this week. I think it's going to be struggling to break this pattern here. So even many S&Ps continuing to shift to the downside here, despite the fact that we've had some days where it looks like we are going to retrace, because those prices have, or the candles have completely engulfed some of the previous days. I've talked about this with this pattern. It's going to get a little bit messy that way, but it's still risk to the downside. Even if we're going to have like a 300-point up day on some of these moves, it's still going to be to the downside unless we can break above some of those previous highs there. You can see here, Friday was pretty boring for the most part after Thursday's big rally there late in the day. Again, yes, we did rally here, but we are still feeling very heavy in my eyes. So I would still be looking at risk to the downside. I didn't take anything off last week. So a lot of these positions I'm going to be talking about here shortly is something I'm just going to throw out there today, because we are very close to my profit targets on these trades. So I'm putting them in early. I'm going to let them ride out, but I wanted to talk about them in the setup phase, because a lot of times I will do this, get in before the market opens on a Monday, especially after we've gotten some of that theta decay, maybe hopefully some volatility coming out of these markets. It's a good opportunity on a whoosh right off the open to get some of these trades off. So with that said, Procter & Gamble, you guys remember me trading this one. I went into the October, and the October sold the 135 puts in there on the 29th of last month. So we're talking right in and around here, selling some puts on this day where we got a pop to the upside. Now I'm selling the 135 puts, which gets me a really nice location here. The Fibonacci here is the 50. We've got a point of control just slightly above that, and just above that we've got the 61 Fibonacci. So I had a lot of support areas that I was looking for this momentum to come off. Now you will notice that I was expecting us to have high volatility during that time and have the volatility come out. That is one of the levers and pulleys with this trade that didn't necessarily work in my favor. It didn't hurt me terribly. Anytime volatility goes up, it does stifle some of that profitability, because we know as volatility goes up, those prices start to go up, right? If I'm selling the October 135 puts in there for 48 cents, I want a bullish directional move, right? Because I'm willing to sell puts, meaning I want a bullish move to the upside. Excuse me. I also want that volatility to come out, because when the time I sold these puts, I had high volatility, meaning I thought my premiums were at an elevated level where I could take advantage of. Well, they did increase just a little bit, but the directional move to the upside in this trade allowed me to get out of these. Or actually, I'm not out of them, to be quite honest. We're sitting here talking about me setting up this trade for today. So I'm going to be putting this trade in for a nickel. It is a working order as of right now. Obviously, the market's not open. So that's going to be the first thing that goes out there into those markets for the interweb. All right. And then let's move on to another trade. I have a working order in here to get out of today, and that is in MRK. October sold the 78 puts in there. If you guys remember, for 50 cents, trying to get out for 15 cents this morning. It's pretty close, but again, making that move to the upside. Volatility is coming out a little bit in this trade, but I haven't had it on very long in order to really get that theta decay coming out of those premiums. This is more of a directional move and everything else. Because I just put this trade on the first. You can see right here, we had that extreme high volatility after the pop on some of the news with these drugs. I expected us to at least stay elevated, right? Well, I got the volatility coming out a little bit, market really not going anywhere, but the volatility, the theta decay, because we got in that month that has that elevated theta decay, I'm working to get out of these for 15 cents. Sold them for 48 and trying to get out for 15. So the next one I want to take a look at here is in the junior gold miners, GDXJ. If you guys remember, I was playing this to the upside as well. And in the junior gold miners, I went in the October 38 puts in there for 79 cents. 79 cents. We put these trades on right here at around the 21st. So playing a bullish directional move with high volatility, it's actually right here with that high volatility. You can see the volatility came out, but the directional move was actually in my face for quite a while there, because if I'm selling puts, I want that bullish directional move. The volatility coming out helped with offsetting some of this directional move. So it allowed me to stay mechanical with this trade, stay in it. That's what we try to teach in my webinars that I do once a week, is drill down on some of the components, the levers and pulleys that will happen with these specific option strategies, so that you know what is happening real time. Volatility is coming out. You're worried about the directional move, but the volatility is coming out. So you're allowing yourself to stay in this trade a little bit longer there. And with this trade, I just remembered I was looking at my average here. If you guys remember, I had a mess up here on this one, and I went in on the 21st and sold those October 38 puts in there for 79 cents. And then about a week later, I came in and on the 27th here, after we got that volatility spike, sold some more 38 puts. So I did average into this one a little bit more. First time 79 cents, second time 59 cents. We're averaging those in at around 69 cents. All right. So all in all, that's where I got into this trade. I'm working order to get out of these at around 6 cents on this GDXJ trade for a bullish move. I'd be happy to get long the junior gold miners way down here right now. If we're seeing inflation start to go up and it's not as transitory as we were expecting, that should give gold a leg to the upside. And Intel, this was a trade we were talking about. We had high volatility in this, and it was kind of getting very close to this point of control. And I had talked about, when we get to these points of control, we are going to be seeing the underlying really start to settle down and get comfortable around that area. And with the high volatility, if it stays in and around this area, I did expect volatility to come out, because I'm selling an option strategy here. I'm expecting my volatility to be at those elevated levels to where I can get out for a nice little profit here. And this was on the 9th of last month, expecting volatility to kind of come out. And you can see we did not get that at all. Again, volatility was relatively low at that time, but with my expectation of us being stuck right here at this point of control and trading around $55 for the foreseeable future, well, I would expected volatility to come out. What's offsetting that? Why is volatility increasing right now? Well, we can see right down here that we have an earnings going on, and that is going to drive volatility higher. Anytime we're around a volatility, an event like that, a binary event is what we call it, where we just don't know what's going to happen, that's going to drive volatility. That's what's happened in this trade. But having said that, the theta decay has really helped out with this trade being stuck here right at the point of control like we expected. So I went into the October and sold the 55 calls and puts. That's what creates that straddle in there. So I'm selling the October 55 straddle in there. Did it for $3.26 today. I'm trying to get out for right around $1.50. So 50, a little bit better than 50% of my max profit, which is a goal I'm looking for in a trade for a straddle. It takes a really long time to have that theta decay really come out of these at the money strikes. So I'm going to be willing to take a little bit less of a profit. For some of you folks out there that are newer to trading, I say, hey, why don't you look at doing these at around 30% of max profit to get your feet wet, to get used to trading these types of strategies that are at the money and seem like they could be problematic. Well, I've showed with these trades why, when, and where we put them on and how we exit, like we are talking about with this trade here today. So hopefully this has all helped you out. I haven't seen anybody throw anything over there in the comment section, so I'm assuming you folks are pretty much on top of it. If you do have any questions, please throw it in the comment section. I will circle back around, folks. And if you've had anything that's been a takeaway, please smash that like button, because it feeds some bots that runs out and finds somebody to share that information with, just like you. So please make sure you are smashing that like button for us. And if you want to make sure you're in the loop with these videos, hit the subscribe button. There's a bell down there in the corner. Make sure you're going on and clicking that to get all of the notifications. I'm not coming in here spamming you folks, but when I do find an opportunity, I will come on unannounced. This is scheduled for around 11:30 Eastern today. Well, I wanted to talk about setting up some strategies, getting ahead of the opening and putting some trades in there that we might very well be able to get rather than when everybody else wakes up and starts throwing their trades in there. All right. So some of us little guys like to get in there early, get that time stamp in there and try and get out of these. So those are going to be 4 working orders that I'm going to be let ride today. So we'll talk about those maybe again tomorrow. All right. So that's all I got for you folks. Make sure you hit the subscribe button, like button, and comment. If you have any questions, please, somebody else is going to have that same question. All right. So if you can't take that, take it easy.